this week's episode of The Lumber Word. It is the 6th of May, 2026. We're recording. Greg, you got a beautiful little view out your back window there. Mac,
Yes,
glad to
remote
have you.
working remote.
Gotcha. Well, they've got pretty good internet there wherever you're working remote.
Mm-hmm.
It sounds really good. Kind of want to jump right into it today because man, lumber's been interesting. Maddie B and I talked on the way home last night. We're chatting about some stuff, and I mean, I got a couple notes here. You know, I think everybody was kind of expecting things to be a lot worse, if that makes sense. And coming out of Montreal, and what I heard from people coming out of Montreal was buyers were not going to change their behaviors. And if that was really the case, which it is, and they're not going to change their behavior, it's pretty good for distributors or anybody that keeps wood on the ground or ships wood around in truckloads. And what we're seeing this week is a lot of people still buying trucks. I think there was a big separation between some people that weren't willing to pay a lot, the bigger buyers that throw volume around, and the smaller buyers that needed it. And as Greg mentioned this morning while we were talking, I think that's starting to close a little bit, where everybody's starting to pay up a little bit more for things. Trucking has cleaned up a little bit, still hard to some locations. CME is going to expire next week, and the spreads are coming in there. Mills are doing what they need to do to move wood. And, you know, I think things are looking okay. Charles, what's up?
I have a question. When you say trucking is cleaning up, can you elaborate on
When I
that?
say trucking is cleaning
A
up,
little
like we had issues getting stuff to North Carolina and Tennessee where you couldn't even find capacity, and now we're finding capacity. I mean, our order file has shrunk pretty good, and it was off of stuff that was a little hard to ship.
But rates are still up, right?
The rates are up, but like people aren't trying to make a vacation off you anymore.
I mean, they're flatlined. They've gotten to a point to where they're kind of stabilizing.
That's what it feels like. Yeah,
Okay.
yeah. But let's jump into pine too, Charles, because like it was interesting. Last week you had a good point about pine having a hard time, southern pine having a harder time making it up north, and we noticed selling more MSR up in the north. When I'm saying North New York, northern PA, Illinois, a couple places that are farther ship locations. But today had a guy telling me that he bought Southern Pine into Ohio instead of MSR because it was significantly cheaper. So are people shorting the shit out of pine right now and like just taking every order that's thrown at them, or is freight getting cheaper to move stuff north?
We ran into a couple scenarios to where people are shorting it pretty heavy. I mean, you look at right now, it's a tale of two different dragons, really. You've got your stock length 8 through 16s. They seem pretty soft. I mean, you look at 6-inch 14s and 16s are sub $400. You know, 10s are still strong. 12s are holding their value in 6-inch. 4-inch has probably got more room to go, but 6-inch seems to be trying to find like a mucky bottom, right? And you know, when I say tale of two tapes, I mean if you buy anything in a commodity or a pre-cut stud and you're not conscious of the stability that exists in that market right now, the price tag is going to surprise you. I mean, we're still getting, you know, $600 delivered North Carolina on 6-inch. Central Florida is $600. You know, but you can't find raw material. Raw material is an issue when it comes to long links, and it's operating from a different perspective than 8 through 16, really. So, you know, that regionality that we discussed and that 200-mile radius is still intact. I mean, we're, you know, minimum hauls that were $700 are still $950. I mean, you're talking 27 to 32% increase. And I think it's going to be a long-term problem. But as far as pine as a whole, you know, the west side, from what I've gathered and some conversations I've had, is finally broke, which is might create a vacuum for some of that cheap central wood via car back west, right? And may alleviate some of the central pressure into Georgia and central Florida that the east can handle, which therefore is going to confirm that pricing on the east side is going to stay stronger for longer, or at least it's going to find a mucky bottom faster and kind of reestablish a trading level versus it being super duper sloppy.
Yeah, I can just imagine
seems to be the one
these
everybody wants out here. Kind of the trend in the nation, right? 2x6 is more interesting and active to people. Can you hear me?
Yeah, I can hear you. 2x6, 2x6 does seem to be.
Yeah, I mean 2x6 dry everything in the West. 2x6 spruce, 2x6 hem fir, 2x6 Doug fir, green and dry both. They're just where the inquiry and the orders are these days. 2x6 studs seem to be pretty active and expensive also. Like the 116s are really hard to find out west. They're expensive also. So if you get some 10s or 12s, you can cut back to 116s. You know, there's all kinds of things going on in 2x6. I asked you last week, like, to look at that rollover date. You know, like you identified that pattern where 2x4, 2x6 cross back and forth on a 8 or 10 month. It's funny how 2x6 just keeps churning along.
Yeah, once it starts, it was like a 14-month cycle, right? And it's continuing to plot along. Also, I mean, I know our mills aren't cutting much 6-inch; they're cutting more 4-inch and smaller logs, right? And I don't know if is that normal, Matt, or is that like your mills?
We're trying to run. We're hardly running any 2x4. If you guys wanted to X-pit with me, I don't have it. I mean, I can't really buy very much on the outside either. In spruce, you can buy 2x4 2 and better. You can just go buy the board and take delivery on it. That's probably the cheapest deal out there in the West. You guys talked about cheaper stuff out of the East last week. I haven't seen a lot of deals pop up. I'm really not trying to buy much either, but at the same time, it's kind of a standoff, you know, like if you look at 2x4 out west. I sold a bunch of 2x4 yesterday out of my inventory at high prices. I was kind of surprised. Today's slower. I don't really know what to make of it. I don't really care. It's I'm in the wait and see mode where the market will tell me what to do next. I'm not going to try to outguess it after a four month in a row upswing, you know, on prices. With yellow pine being a little softer, it makes me hesitant to go out and invest in really what's $600 plate stock for the Texas market going forward.
So a couple of things. I mean, when Ash indicated that, you know, trucking had loosened up, and, you know, we've had 2.5 weeks where we, you know, after for 6 weeks shipping, you know, 60 or 75% of our weekly volume, we had 2 weeks where we shipped, you know, 120%, kind of cleared most of the backlog up. And what I've seen is, you know, the availability increased first, and now, you know, rates have eased back a little. They're still above where they were, you know, before the you know, the skirmish in the strait. But and
it's a mini war. It's a mini war, Greg Trump said.
Consequently, I mean, we had for, you know, 60, 90 days almost, we had as big a backlog of orders, you know, shipping file as we ever have. And that kind of flowed, you know, that kind of cleared through. I didn't want to be bullish at this point, but I've kind of been sneaking into it. I mean, we actually bought a lot of lumber this week out of the East, and we're selling at a pace that's, you know, at this pace, we'll sell 120% of budget this week. We've continued to move numbers, like depending on the items. Some things we're still a little squishy, but, you know, we've kind of firmed and starting to get better numbers on a few things that we were maybe, you know, trading off of. I mean, you know, don't get me wrong. Sitka USA is all about be cheap, be busy. And actually will be the first one to tell you that, like, whoa, Greg, you sold it that? I go, yeah. And I just want to let you know, he, Ashley continues to outperform me in terms of like return on sales. Sometimes he's even making me look bad, and but that's okay. I just go take some more orders.
Matt and I had this conversation last night. I'm like, hey Matt, like I'll sell something down 2x4 116 at 650 somewhere, and Greg sells it at 620. But I go, he's selling 7 where I'm selling 1. And Matt goes, yeah, I do that too, right? It's based on different. And I thought Matt was going to back me up, but he's like, yeah, no, I do it too. I'm like, damn it.
You got to manage your inventory turns, buddy. It's all about the turns.
Yeah. And Greg, if you've noticed, I don't complain very much about it anymore. No. I'm pretty happy about it. It's all but the amount of inventory we bought this week, I'm not going to complain selling 1 or 2 trucks short. Like we need to sell about 200 more. And then we'll be good.
Yeah, no, we are, even with a good sales week pace this week, we are on pace to increase our inventory, and we were trying to decrease it. But I did want to talk about home sales, which came out yesterday and were better than expected. Stand by. Where'd that go? Where'd it go? Home sales. I wanted to let you guys know what they were. I mean, if you didn't see them already. Home sales. This is from our friend Brian Westbury at First Trust. Single family home sales increased 7.4% March. And that was actually they had an increase in February also. They're still at a pace of 682,000 units. I mean, inventory actually went down, which was another surprise to me. It's at 8.5 months, which for new homes is, kind of, it's kind of healthy. If it moves down to 5 or 6, then, they're not discounting anymore. The upgrades. We've been plodding along on housing at levels that are probably too low to support the population, scrapage, household formation. So, I mean, when the dust clears, I am anticipating that there is going to be better housing starts from the 1.3 million that we've been running at now for probably the last, 20, 24, 36 months or so. We're at a, it's a kind of a lower level as we can go, unless, unless we got unknown unknowns that happen to us.
Can I ask you a question? Why are you leaning to the bullish side? What makes you sort of lean in that direction? You said that earlier.
I mean, my backdrop, Matt, is that production in the prior 18 to 24 months of spruce has decreased. I mean, we know that shipments are from Canada down 20+%. Shipments from Europe are down 40+%. I mean, based on what you're telling me on the U.S. West, I mean, I kind of started to get this place last week when I listened to you about U.S. West, and so I think that we've at worst we're at equilibrium for supply, and at best we may have overcut. We've seen curtailments come out in the last 2 weeks in Canada. Well, why is that, you ask? Well, because they're still losing money at today's price. They're losing money. These guys have been losing money for 2 years now. Eventually they're going to run out, of money. And I think with the tariff, with the CVD and AD going down 10% in August, there's an incentive for them to make even less lumber over the next 90 to 100. Well, let's see, May, June, July. over the next 90 days, there's an incentive for them to make less lumber if their mill return is going to go up by 10% on August 1st. I mean, I know the market will think that the prices should go down 10%, and if we go up $100 from here, they'll probably be right. You're 6 weeks away from running into normal summer shutdowns of spruce, right? So, and to Ashley's point, if the buyers have not changed their buying, there's been no build in inventory. So,
No.
and what I see every day is guys buying based on their end use consumption.
Yeah, I mean, I could make a case that we're going to have the highs of the year in July. This could be one of those years where just we get another run and there's just not enough inventory out there in the field to handle that level of new business that may come our way here over the next 60 days. But am I willing to go invest in that idea right now on, May 6th? Not really. The cost of me getting into number 3 right now is so high. It's a 5-year high that I just don't have the stones to do it, and so what's the next most obvious thing that I could buy instead would be 2-before 2 and better, any species, because it's getting cheaper. And according to Charles, the yellow pine thing hasn't solved itself yet, which is going to put even more pressure on 2-before 2 and better spruce, right? In theory. Meanwhile, 2-6 is just clicking right along like you wouldn't believe. It's really confusing for me right now. It's a conundrum.
Yeah, we see one of the listeners just said we're dying in Canada. So much wood is being stuffed into the Canadian market that cannot be absorbed. We can buy random lengths 2x4 from premium mills at $5.50 Canadian delivered, and everyone has too much wood. It's not moving. Something has to give at some point.
Yeah.
That's interesting.
What, Matt?
Why don't you shed some light on that, Greg?
I don't know about that, because
I sure as hell don't. So that's why I was hoping for some clarity.
I don't know what that.
Obviously,
number one, I don't trade the Canadian market, so I don't know.
Yeah.
$5.50 Canadian delivered.
I would say I know a little.
Delivered where, right?
That's probably Vancouver.
And so I mean, add $150 to that is $700. So I think they're overpaying. There's my light, Charles. If you add 50% to that, right?
I think what that guy is alluding to, if I'm reading this correctly, is that the intra-Canada market, it's not robust, right? They aren't seeing the kind of outflows that we're seeing in Texas or California or Arizona, or where you guys put your wood on the East Coast or Florida or Charles down, stuff you're doing. We've all been blessed with a lot of activity, a lot of plate appearances on the selling side in the areas that we have wood. And Vancouver market has not been blessed this year with that kind of activity. It's slowed down for sure. Everybody has ample wood. They're all buying the very bare minimum. You just can't jam a bunch of lumber into Vancouver anymore. And in years past, the Canadian mills would do that. If they wanted to make some wood disappear, they might just send it down to CN Surrey and cut somebody a deal. We'd never even see the wood. But that's not working because they don't have the business. So, however, the counterpoint that I would say is that most of the mills that I'm dealing with, and including our own sawmills here, are trying to target 2-6 anyhow. So, for me to go out and buy a lot of 2-before has been a bit of a challenge. I can buy it. Do I want to buy all of it? No, not really. And are the prices at a point where, on number 3 that I feel like that's a good investment? No, not at all. On number 2, they are. But I'm still undecided as to what I'm going to do for, going forward. I've got enough wood to get me through May. And my attitude is I'll figure out what to do by the end of the month. Going into June, maybe I'll just take June off and go to Italy or something. Who knows? But curious what you're seeing in your business down there, Charles, on the yellow pine side, like your plate appearances and your activity level.
I mean, activity's good. Plate appearances are there. Opportunities are all over the place. It's just a matter of are they pots of gold or are they landmines? I mean, I've gone up against guys and bid on some, weaker sooner wood in, 1 to 2 trucks and 10 to 15 truck volumes, and I'm getting undercut by 30 to 40 bucks. But the past 3 weeks in that experience has shown me that I see that again, right? For a lot of reasons. Number one being trucking. Number two being the fact that a lot of the primaries that produce that we directly and indirectly, do business with and what have you, they don't have the availability in the time frame that's needed, and somebody is taking orders and trying to make it happen. I mean, if you wanted to do that on plate or stock links and basically any width, 4 through 12 inch, you'll probably be fine. But if you're looking for a finished good, I mean, everybody that produces has got an order file, and if you want it quick, you're going to pay for it. I mean, our contract rates have gone up 15% versus 30. That the overall market has gone up. So, I mean, everybody's feeling it. And you've got other industries in the regions that we service that are competing against the same thing, but their dollars per load are a lot bigger, so they can pay more. I mean, outbound Alabama is damn near $5.15 a mile on average, depending on where you're going. Yeah, it's crazy. I mean, $230 South Alabama to Atlanta is going to cost you $1,800 all day.
And I just shipped from Chicago to Atlanta at $1,800.
That's if you can find a truck. And then if you sell it quick, you got a 3-day window to make it happen. So you find a truck, you can't let them go. One day Matt, it's a $40 freight, the next day it's $70.
Yeah.
Matt, you brought up a point about investing in inventory. The problem, the issue that I see right now, and why you always got to keep moving stuff is, I mean, these spreads keep coming in, right? And we don't have that $50 month number 2 to sell into now anymore. You kind of have to
our job was easy for 2 years. Just go out and buy the wood and then sell, 2 months out or 4 months out or both, and just keep rolling your inventory and rolling your shorts. And it was a very simple thing to do. And now it's not so simple. Now you're basically on par. I mean, the cost to carry is higher than what the September contract is going to give you, right? But you're going to pay more in storage and interest than you will the premium.
In we're backwardated. That's bullish, right? I mean, So
I mean, like I said to Greg's, I kind of lean bullish too, but I don't feel bullish enough to go out and make a big stand. It was easy for me to do this in December.
Part of that's your market, though, Matt. You think about it, it's like your market. The slowest months of the year are typically July and August, right? I mean,
I usually have good summers down there, but this is a different kind of year, Greg. This is a year where low grade has gotten extremely valuable and really hard to buy, more so than I even anticipated.
And what's crazy? When I look at the index prices, there's no correlation between what those index prices are and what you give us.
What I'm getting
market pricing, right?
Yep. Yeah, but I mean, look, dude, I'm shipping trucks number 2 right now on number 3 orders.
Yeah, well, I mean, like the number 2 index prices are completely meaningless, and it's like number 2, right?
Yep, pretty much.
But what happens when number 2 is being used for number 3? You've taught me this over the years. What does the market do?
Number 2 goes up.
There you go.
Should.
Yeah, I would, Matt. Like I said, I mean, something has to give there, because basically, we were paying number 3 prices relative yesterday on some odd tallies of 4 inches in some other items, and that doesn't happen for very long.
The thing is, we need people to speculate, and nobody wants to speculate, right?
No, I mean, you're 100%
like
right.
In the old days, guys like you, me, and then all of our customers would go in and buy an extra 5 or 10 or 15 or 20 cars, and then next thing you know, everybody's off the market up in Canada and prices are up $30, 3 days later. The ship would get moving real quick. Now, these days, everybody nibbles at it all the time. It's like a bunch of mice feeding on a cheese block. They're just taking little nibbles, and then they go back into their hole, and then they come back next week and nibble some more.
But isn't
And
that
that's-
healthy? Isn't
It
that
is healthy. It is the
If
sign of
everybody
a healthy market.
if everybody
Yes.
speculates, then I mean, everybody's already long, then it's over. Right?
But it also allows you to keep less inventory if you choose to, right? So if my customers are going to be carrying less inventory, and I've already made a huge investment in 2026, right? And that investment is paid off. So now I'm like a guy in Vegas. I just went and played craps for a couple hours, and some guy went on a 45-minute heater, and I made a bunch of money. What should you do if you do that? You should go back to your hotel room, take all your chips and throw them in the safe, and then go have a dinner, right? And
I just don't like that analogy.
I would have had a much different answer.
We're not gambling.
I would have had a much different answer for that 20 years ago.
Right, but I'm not gambling. I'm
I
not saying that.
don't buy that analogy. That analogy is like, I don't buy that. We're not in the business of gambling. We're in the business of distribution. We're a value-added distributor, and inventory is an asset. It is not a liability.
No, I agree.
And I'm not going to abandon the market, and like tell my customers that, no, we don't have it. I mean, we end up running out of things all the time because it's business. But I mean, if we were $300, $400, $500 $1,000 higher, then I could build the cases like, hey, I need to we're risk managers, right? So what you're saying is you're not gambling, you're managing risk. You think that there's too much risk at today's price, and you have no manage that risk, which I respect that.
Well, I do have a way to manage it, and the way to manage it is to carry less inventory. So where I was going to carry 5 or 6 or 7 million board feet of material in my inventory, maybe I'm going to carry 2 or 3.
Mm-hmm.
And then
you manage it by how many weeks worth of inventory you have.
But I can't sell the board really and get a good hedge, so why do that? I could forward sell some stuff on jobs if the prices make sense, but nobody wants to pay me the prices I need to get for that kind of stuff. So that's not really going to happen, right? Yeah. So then what else can I do? If I can't hedge myself with forward sells, if I can't hedge myself with good sells in the back months of the futures market, I can just cut my presence in half, right?
Right.
I can reduce my exposure, and that's exactly what I'm doing. And so it's just, what it means is I won't get as many plate appearances in June as I would normally, but at the same time, that's just how it's going to have to be. I mean, there's no reason for me to go out and make a risky gamble, in the middle of the summer.
Yeah. I mean, I just look at the prices of all the things that we trade, and I mean, they're still well below the cost of production, and I'm not seeing no more production, and I'm seeing our customers without the inventory. So I'm like, you know what? I mean, to your point, you
have a better cost of entry than I do.
I guess I'm right. I think we're still in a bull market, and
we are. But
the highs are in front of us, not behind us.
You have mills in your area that are using you as a dumping ground right now, and I do not.
Yeah, no,
because the things that I want to buy are not the things that are being done.
We're just a really good customer. That's all.
You know what I'm saying? You've got a yard, and you've got POs, and you've got money.
Question, Charles. If
those are all good things to have, right?
Absolutely, but you're also
it's
buying
on
the
how you
things
describe
that
it,
they want
though.
to ship.
It's on how you describe it.
I'm not buying the things that they want to ship. Every time I float an inquiry for 10 cars and number 3, I get no quoted by everybody. Or maybe I get 1 or 2 cars. But that goes to high prices.
That goes to this question. First for Charles, if you wanted to go to any Southern Yellow Pine mill, how many trucks of 2x4 random lengths or 4-inch pine could you buy today?
From each one?
No, just if you wanted to go, you could buy 100 trucks if you wanted to, right?
Yeah.
Matt, how many cars of 2x4 random lengths, 2x4 number 2 and better could you call a spruce mill up and buy right now?
Maybe 20. Not one mill. I'd have to buy it from 3 different mills, and I'd have to pay, 600 Chicago or 610, depending on the tally.
But you can buy that at a better price on the board.
I already did.
No, but what I'm saying, my point is, I don't think
along the board going to take delivery on that material and use it as number 3.
We should figure out if you know what, I'm still short. I should figure out if we get EFP something for you.
Yeah, why don't you find some 2x4 Eastern spruce that I can take delivery on
Hey guys, I have to roll off. I apologize. I'm leaving early today, but I'm getting blown up with issues here. I'm getting blown up with issues, and you know what? I'll be back in the office next week, and hopefully, be able to give you more of my undivided attention. Love you guys, man. Love you.
Take care.
Be good.
All right, boys.
So Charles, it's funny that you can go out and buy all this material.
Well, I mean, yeah, I mean, you're gonna have. I mean, you could put probably 100 to 120 trucks together with, in random lengths, probably 2 mils, right? But those 2 mils,
what is that going to cost you?
But you gotta take into consideration though, those 2 mills are within 250 miles of each other, right? So, I mean, if you were to look at it from that standpoint, it's kind of it's a unique conundrum, and I think we're all just really confused, and we're trying to mitigate risk in ways that we have done historically, and understand what the next step is before it happens, right? Like we're trying to be anticipatory, but there's a lot of risk on this forward piece. I mean, there really is. I mean, and freight is a whole nother angle.
Yep.
Yeah, Matt. Charles, you're 100% right. I had an inquiry for like 300 trucks for July, August, September, and like to Tennessee, North Carolina. How am I going to put delivered price? I don't know if freight's going to be half of what it is right now or 10 times what it is right now.
Nope.
And I'm not taking freight risk and frickin' lumber risk, right?
Well, and that's the problem. And if you want to get compensated for the freight risk and the lumber risk, nobody's going to pay your price.
The only thing
it's just like,
you got to build in something with.
Go ahead, sorry.
The only thing you can do is build in like something with the diesel index, and nobody's going to do that.
But a buyer's not going to do that because then it's one more thing they got to track when they receive it, right? When they get an invoice and it's different than, I got to go back and change this PO because diesel prices went up and my fuel surcharge is plus 3% than it was originally, right? I mean, there's a million ways that you could mitigate some of that risk, but here's the other problem. If you look at a 200-mile haul, right, and you're at 5.5 miles to a gallon, and let's say diesel went up $1, $2, right? So 200-mile haul divided by 5.5, 36.36 gallons times 2, that's $73. And we're paying an extra $300.
Yeah.
So the fuel surcharge doesn't even cover your ass.
There's not a lot of fun in the.
My real. It's just crazy when you look at the. Sorry, we must be reconnecting here. There we go. We back now?
I think you're good.
Yeah.
We just, Matt, remember, like, do you remember we used to go out and you could buy 100 cars a 4-inch random? You just can't, you can't do that. And then drill down to other items that aren't really produced as much. Other different trims, like you said, 116 and 5/8. In different lengths, there's just a lot less product in the U.S. West and the Canadian market. And this kind of shows how pine is, so Greg had a point, like he's more bullish, but are we as bullish on pine? Like I can see being bullish on U.S. and Canadian species and not as bullish on pine because you can still go out and buy with both hands until you're tired or your bank runs out of money, right?
Yeah, I mean, I do believe that pine has some upside to it, especially if all the Western species kind of hold serve here, which it feels like it's going to happen on 2x4. And it also feels like 2x6 still has momentum. So if you're expecting a big correction on pricing in 2x4 and 2x6 Western species, that being spruce, Doug fir, hemp fir, it just doesn't seem like it's going to happen at this moment. We just don't have enough production and we have long enough order files. The absolute only thing, there's 2 things in the West that have a little bit of give back in them right now. And I would say that it's 2x4, 104 and 5/8, and it's 2x12 Doug fir. And 2x12 Doug fir is just expensive. It's the most expensive thing out there. So it's got some room to come down a little bit, but that's just a momentum trade. The 2x4 9-foot thing is probably just based on the normal ebb and flow of that particular market. You've got a lot of 9-foot production in eastern spruce. You've got a lot in western spruce. You've got a lot of hem fir, a lot of Doug fir. It all just sort of gets mishmashed together all over the country. And we had about a 4-week upward, movement there, a $40 or $50 movement. And now we're starting to top out and maybe run out of momentum, and everybody wants to go back down 50 or $60. It may or may not. I don't know. I can't answer that question. But those are it. That's it. I mean, if you want to buy random 2x4 and 2x6, you just kind of have to pay.
Yeah.
And your options are limited. And it doesn't matter if it's green or dry. It's just, we've had good conditions out here in the West. For the California market's been really good. Oregon, Washington are good. Texas good. Arizona, Colorado. It's all been real steady. And these Western mills in Canada, all of them have VMIs and contracts, with distributors and end users. So they don't have the big buildups that they used to have. Plus, their production's down 25%. So
That's right.
Weird market.
But to piggyback on that, though, Matt, I mean, we've already corrected about $100 in the pine market, and it's happened very quickly, and it's been very quiet, right? As far as the cash market goes. I mean, I think last week we had a $30 print down. Midweek was down 15 on 4 and 6 inch on the east side. West side's probably down $130 since this whole thing kind of cratered, right? The big thing for me is we might already be there, right? Like we might already be at a point to where these Western species are picking up demand because the tertiary markets or secondary markets that usually flip-flop would prefer one over the other, pinning price, right? And if you're seeing firmness in the alternatives compared to pine is going to find a bottom a lot faster. And that's part of the reason why, Ash, I put that trade together with you, right? To try to make sure that we had exposure on both sides. And then once we got out of it, we figured out, exactly where everything shook out and moved on about our day. But,
yeah, it makes sense.
But, the big thing is the Indiana, Ohio markets for us are huge growth opportunities, especially in the Northeast. I mean, we're shipping Southern Yellow Pine studs into New Jersey and Pennsylvania and up in Northern New York. So, I mean, there's a lot of opportunity. There's a lot of re-education going on, but I also think it's still a finicky scenario because you have historical data and historical information and habits that still have to be overcome in order for it to be a finite, like this is what we're doing and we're not doing anything else. That might happen in 6 years, but if you have firmness, as Matt's described, for basically 2 weeks, right, another North American species, pine's going to find a bottom a lot faster than people anticipate.
Well, you always got to bet on the cheapest species in the world, right? So 2 months ago, that was green Doug fir. It was trading at 350 to 375 FOB the mill. Now it's 500, and it's not the cheapest species anymore. Now yellow pine's the cheapest species. And there's been times in the past where we've had this podcast and I said, spruce is the cheapest species in North America. I'm just blindly buying it. That's what was happening back in November, December, January. I didn't have to put a lot of thought into it.
Matt,
like really, you don't need to think that hard doing what we do. You just need to identify where's the value in the market, right? And then, remember, go buy it. And then where's the overvalue, and then go sell it. And that's it.
November and December of last year, when pine was in the high 2s or whatever, and Charles will say,
low 3s, yeah.
It moved almost $200. So now, like Charles, if we're at 490 on print and maybe it's, where's the entry point?
Are you talking about the board on the contract?
Yeah, I'm looking at the board on the contract. Where's the entry point?
I would probably say a good entry point would probably be around $430.
Yeah,
plus or minus $10.
Yeah.
If you want to get super aggressive, probably 420, right? But once again, I don't know. I think a lot of people are unsure of what that finite number is and how long is it going to stay there, right? Because all the conversations I have is, where do you think 6 inch is going to settle, because it's been a leading indicator as far as directional push and pull in the Southern Yellow Pine market for 4 years now. Okay, if it settles at 330, what's the longevity of it staying at 330? I don't know. Is it a day? Is it 2 days? Is it 4 mills and that's it? I don't know. And I'm speaking specifically to the east side, which that contract's underwritten by, right? Because if you look at a historic spread, it's about $100 between 4 and 6 inch. $110. So if 2x6 gets down to 330, 340, 4 inch is going to be as a composite around the same number, right?
How does that work on premium? Does 6-inch normally go? I got to look at the charts. I haven't in a while. How does 6-inch ever go premium very often to the 4-inch on pine?
Yeah, I think it's done it a couple times this 12-month not calendar year, but 12-month trailing. I think it's done a couple times, but it doesn't last very long.
Okay. Okay.
But it usually jumps first or breaks first.
Gotcha. Gotcha.
So Greg said something that I agreed with, that the fundamentals are in place right now for more momentum upwards, right? I mean, it's like there's a couple of opportunities, I guess, you would say, but really, a lot of the fundamentals are in the favor of higher prices and more of the same of lack of availability, of guys having to use your inventory, Ashley, and your inventory, Charles, and my inventory to manage their businesses because they're hamstrung by the corporate philosophy of buying, fill-in trucks versus loading up on rail cars. And then also we're getting delayed shipments out west. I mean, it's taken so much longer right now for me to get my stuff in. The railroads are just moving these cars all over in weird directions now. It used to just come straight, be like in the middle of winter when there's nothing going on, just like a straight line from British Columbia or Alberta right down to Dallas. It took like 3 weeks. Now it's like 5 to 6 weeks. And a lot of these cars, a lot of the orders I've been getting here in the last couple of weeks are just from guys panicking because they had 4 cars put on demurrage or they got put on a hold track. 4 cars shouldn't make or break your business plan, but that's where we are. Guys are just running their inventory as lean as they possibly can get away with. That means, like Greg alluded to, that we're probably going to continue building on prices and keeping these longer order files. The mills have opportunities every single day to sell lumber, and that hasn't really changed. The only thing that's changed is my calculation of risk, right? So,
no,
have we changed the market? I mean, like I look at my stats for the month of April, volume was high. And if I went back and look at all of my May performances for the last 5 years, May is usually a pretty good month. There's usually lots of volume in May. There's usually lots of volume in June too. It's like, for me, it slows down in August, September. And then, in the fall and winter, you never know what you're going to get. It all just depends on a lot of different things that we have no control over that I wouldn't even want to guess at this point. So I do think Greg's a little bit, I think I'm leaning more towards the bullish side as myself. I just don't have a good answer for it other than it's expensive. The cost of entry for me is not cheap and the risk is not easily managed. That's the part that is hurting me right now in terms of thinking ahead.
No,
I think a 30-day window, Matt, like you described, May, maybe early June, right? From just a risk management reassessment scenario, a 30 to 45-day window based on what's happened the previous 4 months of the year. I think it's a great perspective because it's almost impossible to hedge any price risk outside of physical inventory right now.
Well, and we're so out of control right now with things that we literally have no control over, like wars, like the Fed chair, like political intrigue between different nations around the world. We don't have any control over this stuff. Then we have gas prices that are up and down like a yo-yo. And we have, one day we're going to sue for peace. The next day we're going to threaten bombing. It's like, who knows what's going to happen with trucking, with transportation. I know one thing's for sure. On May 1st, the UP and the BN just slapped us with another $6 to $10 a thousand in fuel surcharges going in, for everything we've shipped out of our mills. And now it's going to cost us $700 to $1,100 more per rail car. And, you guys are right about the trucking thing. And yeah, we can get the trucks. The volume doesn't seem to be a problem anymore, but the prices are elevated. I'm consistently paying $200 to $300 more per lane than I was. And I ship the same lanes over and over and over again. So, and I've been doing it for years. So I know what it used to cost. And now I know what I'm paying today. And it's not coming down. If anything, it's going to stay high. Do you see relief in diesel prices anytime soon? We don't have control of that stuff.
But once again, I don't think, to Ash's point, as far as a fuel surcharge on pricing, 300 trucks from July to September, right? I mean, you had a fuel surcharge. It's not really going to cover your true cost. And the true cost is in the fact that, yeah, there's enough volume to move freight if you have the checkbook to pay for it. A lot of people are reluctant to pay for it because they're upside down, which creates bottlenecks, which creates a scenario where people are waiting too long to ship things and pay more than they should if they would have just
Charles,
paid a market rate.
right. You're right on.
That.
First of all, people aren't building inventory. People used to build inventory in anticipation of jobs, right? They're not doing that. Then they used to be able to go out and find somebody to, they'd find 5 people, 10 people to quote something long term, and find the bottom 3 that gave them a number and then counter them and either split it up or take the cheapest one. I don't think there's that many people out there willing to put numbers on stuff right now. One, because their company's not going to let them do it, or you price somebody for July, August, September, you're going to be $100 over today's market if you want to build your risk into it. Nobody's going to pay that.
Right. That's the big problem. Like if you were short coming into 2026 on jobs, just talking 2 and better plate stock and studs, for apartment jobs, you probably made a little bit of money initially in the first quarter. And I bet you've given some of that back in the second quarter, and you probably still have some stuff to cover for the second quarter that's not profitable at this moment.
Yeah.
Especially if you're talking Doug fir from out west. It's
especially if you're talking pine. I mean, you're talking about numbers that were locked in Central Florida at $450 to $470, right, on studs. And I mean, your lowest cost denominator is going to be $588, $590. And that's, somebody taking a bet and it's going to be there in 10 days. Right. And I mean, that exact scenario, Matt, is kind of where we were positioned. And the only thing I knew how to do was to sell through it to make up for those losses. And that's exactly what we did. And now
your ability to do that is different than some of the guys you're competing with, because you're not just a job shipper, right? There's guys that literally have a chair in an office and that's all they do. They don't do any reman. They don't trade anything else. They just sell jobs ahead. And if you're that guy, I mean, God bless you. Those dudes make money most of the time. This is not one of those times they're making money. And they have to build in so much risk going forward, knowing what we know now on May 6th compared to what we knew on December 6th,
100%.
That the forward pricing plus 100 is reasonable, right?
Yep.
And like risk is not just price movement, right? Risk. It's not just price movement risk. It's not just cost to carry. It's not storage. It's outside things we have no control over that are now becoming reality. That's now risk, right? Like Hurricane Katrina. Nobody expected that to make lumber prices go up $200. I remember Boss Man here at Hampton, right after that happened, like, well, why are lumber prices going up? Like, I guess because all the yellow pine mills got run over and nobody has any wood all of a sudden. So, I mean, I don't know. Did you expect a big ass hurricane to make prices go crazy? Back during a recession. So there are things that happen in our business that we have no control over that you have to plan it. You have to mitigate those risks. And here we are.
That's a good question. Somebody just said, you mentioned 5 guys, not the hamburger joint, willing to put business in. Although 5 guys is good. You mentioned 5 guys willing to put business on. Those 5 guys are now owned by someone else. I wonder how consolidation is impacting the business. Well, when I meant putting numbers on, I meant 5 people like risk departments. I mean, one of the big companies that did swaps, those guys are around somewhere else now, right? But they're not at the other company they were at. I think we lost a lot of ability to do risk management, right? Or people like Charles are willing to take big jobs. And I think where the consolidation is hurt is on the people supplying the people the jobs don't have the ability to go out and know how to ask for orders from their customers and then put that long-term pricing together and manage. I could be wrong on that, but there are multifamily people that do it, but I'm talking about people that do it with big home builders and so forth, if that makes sense.
Yeah, like pro yards. 90 days, 120-day deals.
They just want to do they want to do a rolling average with no risk.
Yep.
Yeah, that's
But see, so one thing, this little blip and this change and this about face that we've had in Pine, and like I said, $100 decrease very quietly, very hush hush whispers, can't really pick it up unless you talk to somebody, right? The one thing I've realized is very quickly we go from, as an industry, or at least what I see, we go from losing money to taking risk at very razor thin margins, not compensating ourselves for the losses. Like we're back. I mean, I've gotten inquiries for, late Q2, early Q3 jobs at numbers, studs that are under $530 if I want to take them. I mean, I have no interest in that. I mean, it's extremely difficult to do that. And 3 weeks ago, it was $600. Right.
well,
I mean,
sometimes the best orders you get are the ones you
I mean,
don't.
I agree. I just, one thing I realize is it's always a race to the bottom. Like who can be the cheapest, the fastest in order to take risk and just have a bucket of POs. I mean, that's all well and good, but we don't, as an industry, I think we lose sight of conducting good business. We just want to transact business.
Yeah,
That's
and
why you're on
that's
this
kind of
show,
a point too, kind of a point too, Charles. If somebody out there is trying to price stuff for, Q3, Q4, and they find somebody that's willing to do it at today's prices, and if you got profit in it, I mean, why wouldn't you push some of that
Yeah,
off to
it
somebody?
would
Just make sure
probably
you
do that.
document it up.
Well, you
and,
can't.
and
You're not going to be able to get today's prices for that time frame anyway. Nobody's going to pay you that.
you shouldn't. I'm saying if somebody is willing to do that, you can always.
If anybody's willing to pay today's numbers delivered Southeast, I'd love, for Q3 and 4, I'd enjoy to have a conversation with you. But nobody's going to do it because there's an opportunity to reset average cost. There's an opportunity to position yourself accordingly between now and then because you have enough time to do it to mitigate that risk factor.
Yeah.
But if you're getting 70 under today's number and then you got to go back to today's number, in the next quarter, you're not going to be able to buy enough inventory or forward buy or anything to make it work. I mean, my cross species hedges paid me no dividends this time. None. Zero. Yeah. I lost money on them.
Yeah. So, you've touched on something that's a good lesson for a lot of people. I know that there's some young guys that listen to us. I've run into them before at different trade shows. If you're going to make a career out of this, you have to think about margin. It's not just about the volume of orders that you do, right? I mean, the best traders in the world do high volume and high margin, and there's very few of them. It's not easy. But if you had to focus, if you're a young guy listening and you're trying to focus and make a career of this, you got to figure out how to make margin. And in my experience, the way to make margin is to make good, well thought out decisions when you're going to speculate, to have an out plan. You should always have an exit strategy for if you're wrong, right? In my case, I use my hedges as my exit strategy. And then you should also think about what do you provide to your customers besides prices that makes you better or different than the other guy you're competing with. I mean, are you an expert in anything? Do you know much about mills? Do you know much about freight? I mean, are you credible? Do you do what you say you're going to do? When you screw up, do you fix it or do you make excuses, right? And so the reason why people buy from Charles or Ashley or Greg or myself is because we have long track records of saying and doing what we say and do. And then when we screw up, we make it right. We not only make it right, we probably throw in something extra to make the guy feel like, hey, we actually care, because guess what? We do actually care, right? So you can't fake it. You got to believe it. And then you got to perform that way. And if you can do that consistently over time, you're going to be successful. You absolutely will be successful, but it all starts with the idea that you need to pay yourself for doing this. If you're going to provide all this service to people and take all this risk, you're not just taking risk for your own gain, you're also taking risk on behalf of your partner customers that you're doing business with.
My old boss,
Then
Ted
you need
Block,
to pay.
my old boss, Ted Block, used to always, you know, I had a tendency when I was young to hide from problems when you had them. And he had this thing where you take the top 5 things you don't want to do that day, and those are the first 5 things you knock out.
Do
Right.
them first.
And I got to tell you, like, it's still hard to do those sometimes, but man, the rest of your day certainly goes a lot better when you do that, in my opinion.
I mean, problems are opportunities.
That perfect. You're absolutely right. Like, how many times you had a problem, you turn it into an order, or turn a problem into a profit, right?
Have you ever turned a problem into a lifetime customer with 100% loyalty? I have. Look, just show that you care, and it will pay you in the long run. This is not a short-term business. This is not a, you can do this for 30 or 40 years. There's a whole room full of guys behind me with 20 to 40 years of experience, and they're all good at what they do in all different ways. But I bet you that the one common theme that we all have that have been doing this for a long time is that we don't make excuses when we screw up, and we try to make it right as best we can as fast as possible. And we do. And so people end up, you know, that's a guy that you want to do business with. If you were out there spending your own money buying, you know, a car in your personal life, you want to deal with somebody that's just going to make excuses when your car blows up after a week, you know?
Yeah.
I don't know. You don't want that guy. You're never going to go see him again, right?
Mm-hmm.
So it's no different. Just treat the people the way that you want to be treated yourself, and it all works out.
All right, boys. Let's shut her down. It was a good conversation, and we'll be back at it next week. You guys have a good end of your week.
You too. Y'all be good.
All right, boys.